Hello traders, today is Monday the 15th of May and this is the look ahead for this week. We have two sets of news coming out this week, retail sales and Philly Fed. Expect both to continue to trend down just a tad. Not much, but still the direction of trending is going to be more to the downside. What I want to focus on today though is I want to focus on the 10-year. The 10-year looks like it's getting squozen right here and getting ready for a breakout. Now, we will have to wait and see what is showing the breakout to be, up or down. But in this case, I believe that we could pop a little higher and then head down. Now, if we look back on the monthly of the 10-year, we see something very interesting. So this has been a downwards trend for a long time, and we see that this year it broke out to the upside. I expect this to come down and retest this zone. This zone is somewhere in the neighborhood of 2.7, 2.5, and then I expect it to continually go up. Now, what causes that? I really don't know. Could it be that the United States starts to see some sort of insolvency because entitlement programs, or is it because of higher inflation comes on board? I really don't know what would cause that, but the structural setup of the 10-year is such that it looks like this is going to pull back and then it's going to head higher. So in the next few months, I'm expecting the 10-year to begin its downward move to about, I'm going to call it somewhere in the neighborhood about 2.5 to 2.7%. And it will probably hold there for a bit. Now, a lot of people have this trade on the board, and that is to go long TLTs because with the Spider ETF, because they feel that rates are going to go back down to zero. I don't see that happening. Why don't I see that happening? Well, there's a few reasons that I can think of. Is that one, I believe that our exchanging patterns between countries is going to change, that we are going to begin to become more and more isolated into groups, where in those groups we will exchange with each other, and then every so often we'll exchange outside of those groups. So for example, Canada, United States, Mexico, China, India, and Soviet Union, Saudi Arabia, other countries in the Middle East there, Egypt, so forth, Iran, creating their own. And then we have Europe, Ireland, Italy, Germany, and possibly the UK. UK is kind of on the outskirts right now, forming their own trading segment. I see that this is beginning to happen, and that in these types of, I don't know what you would call them yet, but organizations, countries collaborating, they would trade amongst themselves. What does this do to the US dollar? Well, it begins to deteriorate the reserve currency because there's still exchange going on outside of these countries, these organizations, but it is not as robust as it once was. So you're going to see other currencies begin to gain more favor in that type of environment. Now, how far off is this? I really don't know. It could be 3, 4, 5 years. As of right now, I'm not all in on this macro trade, and I don't see that. But I'm just thinking of some reasons why the 10-year would begin to climb. Why it would begin to climb? Because of the reserve currency, treasuries, U.S. treasuries have always been viewed as the most secure currency. The most secured collateral. But that could change because of this event, because the United States becomes less robust, because of the policies implemented here, because of strains on our social programs, due to illegal crossings at the border, due to we can't afford our social programs anymore due to too much debt. We could see some downgrading, and if this happens, definitely that yield is going to go much higher. Rates are going to go higher, and you're going to see a collapse in the United States of growth because of that. something to be looking for. It's a macro trade. It's a macro outlook, but it's on the table, and we need to pay attention to it because we associate rates with gold. But maybe that trade becomes inverse because of dollar. We'll see. Next, let's take a look at dollar. Since we talked about dollar, let's take a look at it. Dollar has had this big pullback, which we have been short on, but it looks like this channel line could hold here. So I would be possibly looking to turn dollar around. I'm still holding the short just to see what happens here. I want to give it a little bit more time, but I am getting kind of antsy in the trade because it's looking like this is going to hold. Now, my final target on the upside for dollar is at 125, and you see the layout I have here. But I'm expecting after that 125 hit or near that 125 hit, the dollar is going to take a dive and a very serious nosedive. Now, again, this is a macro trade. We're looking at years down the line, but still, because of the lack of dollars in the global financial system, I'm expecting dollar to climb higher. I'm expecting dollar yen to go higher, which we'll look at here pretty soon. And so the dollar, I'm holding short right now, but expecting it to get bullish again. Coming down here on the daily chart, you see how this channel line here is a very big support zone. So we had support here, we had support here. You just mark those, so support here and support here and support here. The question is, are we going to continue for this breakout? Now we have this level right here we need to look at. But if we get above this level right here, if you can see it, that support level, if that holds as resistance, then I'll stay in the trade. If that breaks and holds above, I'm going to exit this trade and stay neutral on it until I get a confirmed bullish trend. So this is how I'm playing that dollar trade, still short from way up top here in this zone right here. So I'm holding this last position to see if we get one more swing to the downside. Again, 98, 97 is that downside target, which I had. But if we do not, and we hold this support zone right here, we're going to start climbing out. And a confirmed breakout of this level right here and hold above that would give us the go signal that on a pullback, so a break up, down, break, down, up, pull back, that would be the trade to look to go long. And that's what I'm looking for. But above this level here, I'm going to cut the trade to the short side. Too risky, and then I'll hold neutral until I see something like that happen or something like a break here, and then I will get long down here. My outlook on the S&P 500, I'm still looking for this to be a little bit more bullish. But once we get up in this neighborhood of about 43.26, maybe a little higher, I would look for a downward move to begin to ensue. I'm looking at this as a pullback to go short, looking at this as a bear market rally still. The only way that that would become negated is if we climbed above this level right here. If we climbed above this level right here, and we broke and held and closed against or above it, then I would look on pullback to get long. This area in here is neutral. Neutral to me. I don't want to be trading in there. It could get really choppy if it does go above this level here, above this resistance support. I don't know if you can see that, but it sets right in there. If it goes above that, then I don't want to be in it. It could get really choppy, but once it breaks out either top side or breaks out bottom side, it would be a nice trend to play on pullback. Either way, I don't have a bias on this. I am thinking because of the negative yield curves that we've experienced, the banking crisis, on and on and on. There is so many, how would you put it, bubbles from having 11 years of almost 11 years of ZIRP. There's so many bubbles. Pick one. You know, there's a lot of dead bodies out there that we still have to discover, and I don't expect them to be favorable to markets. There are pockets of good trades. Are those enough to blow up the market? I don't know. Is AI enough to blow up the market? I don't know. But in any case, I know my zones, and this zone right here is a wacky zone. I don't want to be trading in there. Anything that holds there and pushes down is a good trade. Anything that breaks above this zone and holds above is a good trade. I know it's a big chart. I know this is a monthly, but if we get down there on the daily, you can see that has been pretty messy so far, this move up. So we've had this really getting really nasty right here, consolidation zone. And I really want to be careful in these areas. I do expect still a break up to about 43. I'm still long this to a breakout to the top side. But if you're trading this, on a day trading situation, it can get really messy for you. And so I'm looking at more of a longer term trade. It's been in this zone for quite some time. We've been long this for quite some time. And just waiting for it to hit the target. And once it hits target, we'll cut it loose, go neutral on it, see what happens next. A lot of people are wondering why the VIX is staying so low. But, the Fed's providing liquidity on the backside. So that's what's keeping the VIX low. However, I am looking at the scenario, as I told you last time in the video, where markets are going up and VIX is going up. When we see that scenario, that tells us that a bear market is about to ensue. And that's what I'm looking for here. So we talked about this either ranging, maybe dippity doing a little bit. It did do the dip right here, but it did not break below this channel line. So it should hold. And being that it should hold, you're looking at this zone, this accumulation zone right here. And once that is broken, once we break out of that hold above it and we start continue this move to the top side, breaking through the 200 daily, we should begin to see this move ensue, which I have marked up here. Now, how far does that move go? I think it goes quite a ways. Obviously, I think it breaks this channel and goes up much higher. As you can see that channel there we've had, I'm looking for something like this here. So I am neutral on VIX right now, but potentially long on vol. So go ahead and understand that and look for that. Again, markets going up, VIX going up, clear sign that a bearish trade is about to happen in the markets. Here we have oil. So oil came down, almost hit our channel line. We have taken profits on some of this. I have about one position. Let's see here. Yes, I have one position left on this. I'm expecting a range here, but any break above this channel, let me mark that out here. I can use the arrow to do that with. Anything above, a break above this, I'm out of that one position. We got in up here. It's been a very good trade. Spiked down, collected some right about there at support zone. It set in about 66 and some change. It did go down a little bit further. Is it going to break out down here? I'm not sure. However, if it does, we can see a lot more downside, but in my opinion, this trade might be finished up. It may be finished, and we could see oil start to rise. So the Saudis are going to want to keep this oil price high due to the fact that that's how they make their money. But again, if we get a glut of oil supply due to the fact we go into a deflationary period, oil could drop lower, and that's what would cause a further drop in oil. Then after that, we could see an initial burst in price in oil. I want to talk about dollar yen now. So I am short the Dixie, but to counteract that, I need to hedge, and I would be looking at getting long the dollar yen. So understand how this trade setup is designed. I have collected a lot of profits from my Dixie trade, and I still have one position in it. I can hedge that position by putting in a position on dollar yen. However, because I have made profits in the Dixie, I'm going to put 3 positions long on dollar yen. Now I'm going to have 2 of those positions leveraged not so much, and one of them leveraged comparably to my Dixie trade that's on there right now. And that's how I'm going to risk out the trade. So here, I'm looking at an entry and looking for a target above this high here. Now I'm looking at to go further. I may keep the trade on longer if this long-term trend continues to the upside. If I break below this channel, come down, I'm probably going to get stopped out of this at a small loss. I don't want to take too big of a risk on this just yet because I'm really not sure about the dollar. But if the dollar turns around here and we catch the move on the dollar yen, I think it's worth the risk. So I'm taking this risk based upon that and based upon what I have earned off my Dixie trade. So I'm using that along with the Dixie position to the downside or the short and this is a hedge against that. I think it works out well. So dollar yen looking to go long now. Next, Aussie yen. I am looking for this. It looks like it's getting ready to break to the top side. Again, I'm keeping my stop loss relative to what I expect to gain off of this small. So stop loss setting down just below this channel line, somewhere in the neighborhood of about 88.91. Take profits somewhere in the neighborhood of about 99.16, maybe a little higher. I'm really looking for a much larger swing to come up here and the swing to be somewhere up in here. But I want to make sure I can break through this resistance here that sets up about 98.5. So once we break through that, I may keep one position on. If we break and hold above that, I'll add more positions back on. But once we get close to this top level here, if we get up there to 98.30, I want to be unloading some positions on this. So I have 5 positions on this, medium leverage on it. Again, I'm not completely sure what the dollar is going to do, so I want to be careful here. But medium leverage should work out well. Going to see if we can catch us the move there and see what happens. Pound Aussie, that I came down, we went short this, we collected some off of it, it's pulled back again. I'm looking to see if this continues its move to the downside. Let's move this over just a tad here so it's kind of out of our way as we look at this. So again, this has been a slow trade. It started to move, gain some momentum, broke through this smaller channel here and held. It's been holding below it, but we need to see this swing down, and we want to swing that down to about 1.845. We'll take collection of some good profits there, hold on a light load to see if it goes down any further. Again, this has been moving pretty slow. So Euro Aussie, we see we got a spike. Our second position went active, and that's good. So we have total, we have positions on this, positions on this. We've collected some on this one right here due to the fact that it's a lower stop and more risk on this trade. So we've collected on this trade here versus this trade over here. We've kept most of our positions on this trade. This one is, I'm looking at this and I'm almost to the point where I'm going to take this entire trade off. I'm going to look at this next couple of days and make that decision, but I may just go ahead and take the entire trade off. It was a good trade, very profitable trade, went very well, moved quickly versus Pound Aussie. So because of that, I'm just probably looking at taking the rest of the trade off. No trades looking forward on this right now, but as soon as we see another one, we'll put it on. Bitcoin, we got involved in this about this level right down in here, and it went up, looked like it was going to break out. No bueno, came back down into the wedge and broke through the other side, retested, came down. Now it's hitting a support zone here. I knew this would be a pretty tough area, as it was pretty tough over here. If we look at this, and we're near that zone, but this, we got to be careful because this is looking kind of like a head and shoulders right here. And if that's the case, we could see a more downside move to about right there. So I am going to stay neutral on this. I lost money on this. That's all right. Sometimes it happens. I was hoping that this would swing out and that would be the end of it, but did not want to do it. A lot of things came into the market, caused a downside move. Obviously, the banking system, once again, a problem. So we did not get our target, which was right up in here at 32.9. We may still get that. So And once we get down into here, I will feel more comfortable looking at a possible long on this, and we may still get that target up into here. So we're going to stay neutral on this until we see things move a little bit lower. If they don't and they just head on up, we'll miss the move. But that's what I'm waiting for to get involved, is a move down here in the neighborhood of 25,000 plus. NASDAQ we're still long this. It's been a bumpy, yucky ride. Let's put it like that. Still looking for a move up here to getting up here to the level of about 13,624.50. Somewhere right in there is where we're looking for this thing to go. We are long this until that level, and as I have said before, we will go neutral there because we are not sure what's going to happen after that. We're not sure. We just don't know. And so we're going to stay neutral it, and we're going to see if we break this resistance right here. Now that resistance sets at about 13,726, maybe a little higher than that. Let's see, about 13, there we go. 13.7, we'll just call it 5.0. How's that? And we want to see, do we break and hold above that? Or do we break, come back, retest, and then we get long? That's what we're looking for. So right now we are pretty much in a long position up to these levels. We're going to stay neutral and look and see if it breaks resistance and then goes long, or if it holds and it starts rolling back down to the downside. Again, this kind of a odd chart. If we go out on the monthlies on this, let's take it on the monthly. I have not looked at the monthly for a while now. But if we look at the monthlies, it still looks like it's got plenty of room to get up to our target. Looks like it can do it with no problem. But right now, we want to be cautious once we get up to that level. We just want to see the bullishness and how it plays out. And if it gets bullish, we'll get in it again. Again, we really need to break this high right there to ensue a strong bullish trend up to about right my line up to about right there. So we got to break this big time resistance there. Am I bullish on it? Not right now. Not right now. I'm cautious. I'm long to the long side cautiously in a bear market bounce scenario still. I haven't turned bull on this yet, but I have been long it for quite some time in this move up. It's been a choppy ride, very choppy, but it is proving to be worth the chop. So yes, I do believe we do reach my target, my first target, and we will see what happens after that, folks. The euro dollar trade, again, you can see what I'm looking at here. We are looking at this as a pullback to swing and come down here and hit target. Let's see, where is that target at? Somewhere right in here, about 0.83. And then I'm probably going to be looking at going long euro dollar. As of right now, though, I'm looking to go short. This is a monthly chart. We're banging up against resistance right here. So again, I'm looking at the dollar. I'm looking at the euro dollar here and seeing if everything correlates to take a short on this. So far, not ready to pull the trigger yet, but getting close. So if we look at this right now, what would tell me to pull the trigger? Well, what I want to see here is I want to see a pullback, something like this, and then a rollover and a break if this holds a support. And I get a breakthrough there, that's where I'm taking my trade. And then what it tells me is we are going to go down to at least here, probably pull up again, and then we could see a continuation down once we break this support zone right there. We see that continuation down. And obviously, I want to hold it to here. I want to take some profits. I want to look see what the pullback's like. And then if it does swing back down and break this support, I want to load it up again here for the next swing move down. So that's pretty much the way I'm looking at the euro dollar right now, but I still think we've got a long ways to go with it as we see on the monthly chart. I still think that this goes way down here to support around the 83 zone, 83.5 zone. I think that's where it's headed in the next few years. So that's where the long trade is, where I would take it to. Here's a monthly on pound dollar. I want to show these monthlies to you so you understand where my bias is coming from when I'm looking at a downside move in these still, and why I think stocks will be heading down eventually. But here is pound dollar. I'm looking for a rollover on this upside move that we've been having here. So we came down, hit quite a significant low back in September, bounced back. We've been pulling back ever since. We're looking for the pullback area. It's probably going to be between where we're at now and maybe a little higher, say in the neighborhood of 1.3056, somewhere in there. We're looking for that pullback. You see that resistance zone right in there, and that's right around that zone. So I would be looking for a pullback, and this continuing to pull back this month, and then down here on the dailies, what we want to look for is once we hit those areas, we want to look for a change in direction, So something right up in here, in that area there, maybe higher, but very close. You see we got a reverse head and shoulders. We got to play that out. So we're looking for a little bit higher. And then once that's done, we're looking for it to roll over, and not only roll over, but come down and break the support line and go lower, as you can see out on the monthlies of what's happening out here. And that's really what we're looking for, a continuation move, and possibly even down in this zone here, a new low for the pound dollar. This is the TLT trade here that I've been looking at. Going to put some on this, but it's not a long macro trade for me, okay? Obviously, I expect these to meet again as they have done in previous sessions. So let's go ahead and take this and look at it, what it's like when we have a collapse. So S&P down, what happens is TLT, it goes up. I'm expecting a move down in the S&P. So what do I expect for the TLT? I expect it to go up. You see we're wedging here now. There may be a possibility that this trade takes off once this wedge is completed and breaks to the top side. We will see. It is definitely in line to be able to do that. We would expect somewhere in here the S&P should start rolling over. We're expecting it to maybe go a little higher and then start to roll over and head to the downside, which would mean this whole pullback would swing down, which means TLT would definitely go long. So I'm getting ready to put some money into a long position, not a macro trade, but a long position in TLT, and obviously looking for a short position in S&P. Looking for that. Maybe we'll trade it in the futures to the short side as well, but on ES. But we're looking for these two to get together again, and it will be quite a show when they do. So I'm going to leave it at this this week. Not a lot of news again coming out. A couple of days of news, Wednesday, Thursday. You want to look at those housing starts, see where they're setting at. You want to look at retail sales, see where they're setting at. That's the last domino to fall when we start to see a turn in direction in those two, which we have been seeing. So we're going to see if that direction to the downside or contraction is going to continue. Have yourselves a great week. Good luck trading, and we'll talk to you later.